Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here on Friday, May 15th, 2020 with a Forex market analysis and live trading breakdown for you. And real quickly, let's have our disclaimer up here for you to remind you that this webinar is for illustrative and educational purposes only. And we have a couple signals to take a look at. And one of them happens to be a high probable Japanese candlestick pattern. And by the way, there's a book actually called High Probable Japanese Candlestick Patterns. It's available on Amazon.com on Kindle and paperback version. You should check it out. And now let's talk about what these things are. So we have the Forex-Trading-Unlocked.com website pulled up already. The workstation page is already up. We had most of the numbers are done for the day. We still have a little bit coming out for the Bank of Canada, as well as also for the house price right move for the UK. But let's take a look at what's going on here. So we have a US dollar Japanese yen chart up here. As you can see, it's been consolidating. This 107.75 here represents a strike price from some binary options that we had purchased earlier in the week. Right now the market's at 107.15. However, we need the market to get above this strike price in order for us to make this profitable, or at least get close to it sometime within the next couple hours to maybe get out and scratch the trade. So we'll see how this manifests. Right now the market's really quiet. The stock market in the U.S. is now open for over half an hour, and things are pretty quiet. So what does that mean? Well, we're probably not going to catch a move right now. It's probably what it means. It's probably going to be a sleepy Friday. As you can see, all the action happened on Monday, and we've contained the last 4 days in basically the upper half of that range. So we did make money on the upside for our Forex position earlier in the week, and we actually had another intraday long. We are right now currently still long the US dollar Japanese yen for a nice slight little profit. On this trade, we are also short the New Zealand dollar US dollar and short the Australian dollar US dollar. We will get to those in a couple minutes. But first, let's take a look at the yen trade that we're talking about. So we know that we have the options. We need to get above 107.75. For those, currently we're up slightly in the Forex position. Now, our target for this is actually not as high. This is our upper boundary, this last swing high and this last swing low. You can see where the last red bar is. That's the low. 2 days later, that's where the signal came in. So that was Friday of last week. And as you can see, it worked into Monday, and then that was pretty much the wad. We had touched right up at our strike price for our options, so we came close, and we were doing good for the first day. But then as you can see, the rest of the week, we just have gone nowhere for this market. Very interesting consolidations going on in all the markets. We've been seeing this happen for quite some time now. So since we're starting off in the Asiatic trade zone, let's go to the Australian dollar, US dollar, since we have a trade on in there. So we're trading the Pacific Rim, basically, and we have the Australian dollar, US dollar heading here, where we have a somewhat of a head and shoulders forming here. So as you can see, here's our neckline. It's pretty steep. Right now we're just coming into it. So the key right now is for at least any aggressive bears, I would key off of this the head as any upside breakout point. As you can see, we're hovering right on the neckline. So if we can get a close below this neckline today, and especially if we could take out this swing low right here. If we could take out this area here, that helps to confirm the head and shoulders and will have us going much lower. But right now we don't have that confirmation yet. So, but we do have another signal. That's why we are short. So we're hanging on to that one right now, and we know where our risk is right here. Now let's look at the New Zealand dollar, US dollar, and see where that is. So we are short this one also. As you can see, it is still slightly lower on the day, and we have a similar pattern going on here because we had also a head and shoulders pattern. This one took out the neckline 2 sessions ago, closing below it, and also taking out this low here. As you can see, when we took out this swing low here, that confirmed our head and shoulders slide. So we're ahead of ourselves. This one's confirmed already in motion. The head and shoulders pattern has formed, and we are looking for a break to test. And we'll take this down to here. So really right now our first guide that we're looking at is right around here and right into here. So this is pretty much what we're looking. We're looking for a correction here. We're not saying this market's going to be overall bearish. This could be set for a wide sideways. We may not even get down there. But the one thing that happens here, like we've already taken out this one here, this low, and if you move it over here to this swing low here, see what happens here. If we take out that swing low, obviously lower move lows, lower move highs, that's bearish. That helps to most likely aid the momentum to the downside and probably will help us get into that target area. So right now we have that confirmation of the head and shoulders sell signal, and we're looking to see how it goes. Obviously we're short. Now the risk level here, since now we have the lower head, the shoulder here would be our risk level for this trade. This one's already confirmed. So for aggressive shorts, the Australian dollar tends to have a little bit more volatility. So now let's look at the U.S. dollar Canada. Let's come around to America. We're going to end up in Europe at the end with the other majors. U.S. dollar Canada, talk about a chop fest. Had a nice little, somewhat of a little rally this week off of the lows from Friday, but the last 3 sessions, actually, we've gone nowhere. And if really you look at it, for the past 4 days, we've gone nowhere. It was really, from Monday was the only true trend move that got us into where the range that we're at right now. And as you can see today, very quiet here at 9:15 Chicago time. So what's going on with this one? Well, this one also, I would say that, well, this definitely is the major resistance breakout, but since we have this consolidation form, we've been making lower move highs, and then we were making lower move lows until recently. So this is pretty much your baseline right here. You want to use this, and then you also want to have that swing low. So this would be our consolidation range that we're looking for this market to be contained in, and we just need a breakout. So right now we have all these markets, their coils are winding. So let's look at something a little bit more exotic that may have a move. US dollar Mexican peso, speaking of head and shoulders, this one had one going, and this one also just wants to seem to just drift and drift and drift. So here we go. We had a head. Here's a shoulder, here's the head, here's the shoulder, and what happened? We took out the neckline, and we've been bobbling right around it. So this market, too, looks like it's in consolidation. The coronavirus curve seems to be slowing down. And in Mexico, it seems to not be as bad as it was originally racing a few weeks ago, so that might be why we're having some consolidation. The U.S. dollar, though, is still going to remain strong against, I think, the Mexican peso for quite some time. But we'll see if we can stay below this neckline, and especially if we take out this low at 22.85, then we have a good chance of getting back down to this 21 pesos to 20.5 pesos to the dollar, and we'll see how that goes. I mean, remember, this had a big velocity. This market was in a bear market going into February, and then all of a sudden, like a balloon underwater, just went into this, just exploded to the upside, and then just kept going all the way up into the stratosphere. I mean, this is a very big move from basically 18.5 pesos all the way up to almost 26 pesos, and that was all in a month and a half. Very extreme move. So we don't have anything more on that one, except that we do have a sell signal triggered there as well. Sideways to lower is the call. Now we have the U.S. dollar Turkish Lira. Here's one where this bull, we want to talk about a rager that's been going on, but now we're hitting right into a corrective zone here. I would be very, very cautious. If you haven't already been short riding this move down here, I would be cautious trying to sell in this area right now. You're coming into some support here, and the one thing that this market has done is correct very quickly. If you want to look on just a fib basis right here, you can see that we've already crossed the 50% mark, okay? So if we take that as our high, and then we'll put this as where's our target band? We've already hit into our target band for this as a correction. Now, does that mean that this market's going to be all of a sudden a bull? Absolutely not. We don't have a signal, but it's very likely that we're going to find support here, and then especially since we're in front of the weekend, I would say that you're probably going to see more people coming back in to buy the U.S. dollar versus the Turkish lira than to sell this going into the weekend. So we're just trying to look at this as one of the lesser majors to give us a guidance on where the dollar support or resistance is. And since we've been talking about the dollar before we get into the European currencies, let's look at the dollar index once again. Sideways, sideways, sideways. So see that? Chop, chop, chop. That's not something to use as a guide. So we're starting to see that The coronavirus trade obviously is off the table most likely unless we have a major resurgence globally, and now the markets are trying to find a guide. So there's still strong support for the dollar, but right now it looks like they're trying to push a little correction. So now let's go to the British pound US dollar and see where that is. This is our second major currency versus the dollar in the index, and it is continuing to make new lows. Now this market had crossed this trend line and had a head and shoulders formation. Now it took really until 4 days ago, 5 days ago it settled below it. But really it was 4 days ago when we got this break here that took out this last swing low. That was the confirmation. When we settled below that, now as you can see for the last 3 sessions, 2 days ago, there wasn't much of a range and it really wasn't going anywhere. Now today it is, but be careful. This could be just setting the bottom of the range, but then another thing is besides it taking out that other swing low, look at where it's at right now. It's right on this one right here. So if we settle below this, well, besides we've already had the confirmation of the head and shoulders, where can we go? Well, we're just going to do an eyeball with this real quick. So, and we'll do a Fib projection. So if this here is our target, and here we go. All right, so we've got this in line. So here we go. Right now we've taken out these 2 last swing lows, higher move lows, confirming our bearish action in our trend here. After all, remember we made a lower move high. Now we've made lower move lows. We've done that consistently. So that means what? That's indicative of a trending lower market. So we're going to still be bearish this market for right now. Remember that it had been going sideways for quite some time, but now it looks like it wants to go down. And we have this downward sloping resistance channel that'll help to guide this down towards our area. So this is really where we're looking to have pretty much somewhere right in here. That's where we're looking for our target. So this would be a good spot for the pound US dollar to end its slide. So this would be here where the dollar is gaining strength. So it's kind of funny where we've started to consolidate in the major currencies, and this is good as we're seeing a move here in one of the majors because we see so much consolidation in so many of the currency crosses. It's kind of like a big EKG. We had so much volatility back in March, just like you see here, and then here it started to flatline base. But now I think we're ready to see where we get the next spike. Is it going to go lower? Is it going to go higher? Right now it looks like, at least as far as the pound is concerned, US dollar strength is going to be where momentum is coming from. So let's take a look at the US dollar Swiss, one of our flight to quality currencies besides the yen and the dollar. The Swiss is the big one. This is another chop fest, and this is where we get into. Now remember, this is a flight to quality currency. There's a lot of issues in the EU, but not so much for Switzerland. So I think that this one is going to be a very tough trade. Unless you get a signal in this one, I would stay away. This thing is wedging. It's waiting to pop, but it's got no reason to make a move. Remember, in the UK, they do. Brexit is still going on, and so is a bunch of other things with them. They have trade deals with the EU they have to confirm, as well as with the United States and Canada. The euro US dollar, look at this. This is a bloodbath. Anyone that's not a range trader has gotten slaughtered over the past week and a half. Look at this. These ranges, like even today, what is it, a 50 pip range? Let's see, 85, let's see, 0851 down to 788. So that's 50, that's 63 pips. Not a very big range for the day, considering what we're coming off of. So we don't have a signal in the euro US dollar. So all of our major currencies in Europe, except for the pound, are starting to really just become lackluster. So I seriously got to wait for a signal, folks. That's the key to making money when it comes to trading. Don't try and force a trade, because unless you're just trying to buy in the new lows and sell into highs and play a range trade play, which that's for people who know what they're doing, I would suggest that right now you just got to sit on the sidelines, and we'll see what happens next week. So if you're trying to get a trade in front of the weekend, except for the pound, where we seem to have some bearish momentum, I would say stay away from all the majors. There's nothing really there. And even look at the US dollar JPY. Remember, we've been sitting on this trade all week long. Irony of it all is as we've been speaking, it's actually been rallying, but only like 10 pips. So it's pretty much unchanged on the day. So, but as you can see, with our position here, even though the underlying indicative index is at 107.17, we have to get above 107.75 to make this a profit. But we do have a nice lead once again in our US dollar yen trade. We are long that, so we'll lift our stop up to keep that profit in there. In fact, we may just liquidate this trade as it goes into the weekend. So we'll have to see. We'll see how bullish of a move we get into the afternoon. I mean, it is only 9:24 Chicago time. We still have a full trading day left in America still going on. The rest of the world is shutting down. It's been pretty quiet, and the morning so far hasn't been that crazy for the way things have been for months. It's kind of weird how we're almost like we're 1 week away from Memorial Day here in Chicago and the U.S., and all of a sudden we're having quiet markets. It's almost like we're going to have a normal summertime. Yeah, right. I don't think anything's going to be normal for a while, right, folks? All right, well, thank you very much. Remember that we have this trade here. We're going to go over this, the trades that we have in motion. So we have this one on. That's our signal. We're still riding the U.S. dollar GPY. Remember, we have the British pound US dollar, which is confirmed its head and shoulders slide, and we have that targeting lower levels here down towards this area of $1.20, 29 down to $1.80. What is it? It's $1.1888. Yeah, down to $1.20, 29. So we have a nice little range for it to fall into. Even if it just tips off the top end, that would be a nice trade. And then we also have, remember, we have the U.S. dollar Mexican peso trade here that has this other head and shoulders. We're trying to see if this trade manifests, but it doesn't seem to want to. This one I would use caution with. If you want to play it, I would say, the pound US dollar hasn't given us a signal. The US dollar yen, it's already in that trade. There's not much left in it. So if you're already in it on that side, maybe take some perspective on what we're doing. And then also we have, what was it? We had the US dollar. Or AUD, US dollar. Remember, we had the Australian dollar position where we were short this. This one has not confirmed the head and shoulders. So, but because we have it in the New Zealand dollar, US dollar, and these markets have been pretty much in tandem, that's where we got into this. We actually had an intraday hourly one for the Australian dollar. It gave us the lead. Hopefully that gets confirmed with a lower market today. This one, since this hanging off of its lows today, and well, it's still below in the lower part of its range for the day. So we'll see how this goes and manifests the trading for the rest of the day for this signal. We have a nice little lead on this trade, and the good thing is with this one we have a nice little distance that we're looking for. I mean, right now the market's at 59.62, and we're looking for it to get down to 58.21, 57.37 area. So anything in here, that would be a nice trade to have work out for us. So we'll see how that goes into next week. Right now the markets are quiet, things are winding down. So since you have been hanging around for us with this webinar so far, so long, if you don't have any trades on and you want something to do, check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com and Kindle and paperback versions, and see how you can utilize these signals to incorporate them into your trading war chest and help you get through the wild swings that we have to deal with in the markets these days. And with that being said, please also subscribe to our YouTube channel, Forex Trading Unlocked, and check us out every day at forex-trading-unlocked.com. Thank you very much. Oh, wait, we do have a question. Okay, I'm sorry. Someone in the chat room. So real quick, let's go back to our live screen, since we have somebody in the chat room that has a thing. So any tips from Tom Pebble? Okay, I have a few. Okay. All right, so we have someone in the chat room who real quickly has a question here. Any tips? Well, that's pretty broad-based, but yes, absolutely. So right now, remember that we're coming into holiday markets for trading the FX markets, the options markets, the futures markets, and the binary options markets with the currencies. Be mindful of the fact that besides holiday markets coming into next week's action, we also are not that far away from the June rollover. So that's going to influence what goes on with the currencies, because remember, all your major currencies have futures contracts. And as they expire, the spreads start to move, and that also causes some erroneous gyrations, if you will, as far as price action. So what does that mean? That means that between next Wednesday and the following 2 weeks, because of a holiday and also the flipping of spreads in the futures, you're probably going to see some really weird price movement where it's not even the algos kicking in. It's just a rolling over of those contracts. So when that happens, the question is sometimes does a dog wag the tail or does the tail wag the dog? So is the cash currency Forex market going to be holding the moves for the market individual currency crosses, or will spread movement in the futures cause erratic movements in the cash? Because you got to remember, they're, especially with the algorithms, they're playing both the futures and the cash markets simultaneously, and they're trying to work an arb between that, or meaning arbitrage. So, and when they're using spreads as well, and they have to roll out of them, that means that whatever June cross spread they have, say in the euro US dollar or in the US dollar yen, they will be rolling that out of that June month. So whatever other leg they have, they will either be flipping that leg or they will be substituting the June for a further out month, most likely the September or December, depending on what the other leg is and if they rotate that. That's a topic for a whole nother story. But that is something you need to be mindful because we have all this sideways trading. So because the major currencies are consolidating, and this is your tip, Tom Pebble, be very mindful of the major currency crosses: the Australian dollar, U.S. dollar, Canada, the British pound, the euro, the Swiss, the Japanese yen, and then these ones that we've covered. These are your majors, but the ones with the futures contracts, those are the ones, especially like you have the euro, the pound, the Swiss, the yen, the Canada. They're the ones that are winding their coils. Be very cautious over the next 2 weeks because those two variables could mean it's a range trader's delight where you're going to get rallies and you're just going to barely pop through the highs that you're, new move highs or, new move lows to the opposite way, and you're not going to get any follow through. There's going to be very thin volume also. Remember that even though we have rollover, you're going to have a lot of there's going to be spikes in volume where there's going to be all or none. So that's the causes what are called vacuum moves, because all of a sudden big money can come in, or big orders, not necessarily big money, but big orders come in when there's really light volume, and all of a sudden the market gets pushed around. So you get a lot of erroneous spikes. Like here, as a good example, one last as we end this thing here, you don't really understand the patterns. Okay, well the patterns, let's see. So head and shoulders, let's give you one that's really clear here. So remember the British pound, US dollar. Okay. So for one of the basic patterns that are out there from a technical analysis is a head and shoulders. So this one right here would be your shoulder. Okay, so let me just put an S here so you can see this right here. Let me make this a little bit darker so you can see it. Okay, so this little area right here, Tom, is your shoulder. Okay, and then we have right here, this last swing move high here, this is going to be your head. Okay. And then we have over here this last swing move high where the market's been breaking off of. That's our last shoulder. Okay. Now, when you have a situation like this, when you had made you had made two higher move highs, then you had a higher move low with a lower move high. That's where you have the beginning of the setup of this pattern. And when you have the shoulder and the head, you take a support line from the last swing lows, okay, and that gives you your neckline. And if the market falls below it, that confirms a head and shoulder pattern. And then typically, you'll find momentum will carry the market, depending on how much volatility there is in a determined distance. So our target here, because we had enough volatility, we used the Fibonacci levels to find the price target. So this is a head and shoulders pattern. You can find this in any basic technical analysis book, Tom, and you can also find it, obviously you can Google head and shoulders trading pattern. Now, as far as other patterns, like when we had the US dollar yen here, the US dollar JPY, remember we started the webinar off with this one. This is called a 3 inside up buy pattern. So where this little arrow is here, okay, so we had this market was trading down, and see this last red day, that's the last down day right here. That was the first day of the pattern. Then we had a small up day the following day that's kept inside the lower part of the range, and then we'd follow through the third day. Okay, that's this day that becomes the signal day. So that would be last Friday. Okay, so if you see, I'll move this line to that line right there. This was where the market closed on last Friday. Okay, so that was our buy signal, the 3 inside up. Now that's a pattern that I mentioned in the book, High Probable Japanese Candlestick Patterns. you can Google the pattern, 3 inside up day, or you can read the book and it'll tell you how to trade the pattern. So, so these are where these patterns come from, and you are welcome, by the way. So if you want to learn more about this stuff, Tom, just keep watching our videos, subscribe to the Forex Trading Unlocked YouTube channel, and I will watch for you in the chat room as well. And if you do have any more questions, because otherwise we'll just pretty much end the webinar, but I can either look at another currency or I can answer another question for you. So I'll give you a second if you're still in the chat room. And let's see. Okay, so once again, folks, we went over these signals, and we had a nice question interacting with our guy, Tom Pebble. I will do. Okay, cool. All right. Thanks, Tom. Well, you have a nice weekend, and thank you also for your questions. We always like to interact with people live if we can, because otherwise, if we don't see you live, then we will usually incorporate you into our next video. Try and mention who you are, too. So, okay. Great. All right, Tom, you have a great weekend. Thank you very much. And for everyone else that was hanging on, also, I want to thank you very much. Also, please subscribe to our YouTube channel, and we'll check you out come Sunday night with some more analysis. Remember, we got the head and shoulders patterns, and remember, we also have that we are short the Australian dollar, U.S. dollar, short the New Zealand dollar, U.S. dollar, and long the U.S. dollar, yen. If you want to follow our signals when we're not on the webinar, you can always go to our website, and there's a signals tab in the navigation tab for our signals, and you can load that up, and it'll go to a third-party confirmation website that audits our trading, and you can see what positions are on. Now, everything's a little bit in delay. Don't try and copy these things. If you want to be a part of them, join the signal service, and then you can be getting everything taken care of for you and done properly. So with that being said, you guys have a great weekend.